Hello, this is your mortgage market at a glance, the daily news that affects mortgage interest rates. My name is David Walterman, and today is Friday, June the 19th. It's Juneteenth, a federal holiday, which means the market and banks are closed today. So any of the news that happens throughout the day will not be affecting the bond market or interest rates. I do want to take a second and talk about Kevin Warsh, the new Fed chair. Breaking down some of the details that came out of Wednesday's press conference, I really do think that we have someone that actually gets it. I also think we're going to see some meaningful changes in the future. One really interesting thing was how Kevin Warsh downplayed the dots plot chart and the forward guidance it provided. And if you're not familiar, the dots plot chart tracks where the individual Fed members think the Fed funds rate will go in the future. Each one of them will mark a dot on a chart on whether they think there's going to be a rate hike, none at all, or a rate cut. And this latest dots plot chart revealed that half of the members thought there would be at least one rate hike during this year. 5 members thought there would be none, and 1 member thought there would be a rate cut. As you can imagine, when the market hears and sees this type of information, it reacts. That's why we saw the 10-year Treasury spike on Wednesday. And Kevin Warsh downplayed all this because the truth is, it's not even close to reality and things change so quickly. Kevin is also creating 5 task forces that will help bring significant change to how they make monetary policy in the future. In my opinion, the Fed has always been reactionary, looking at past data and faulty data at that. And this has created a repetition of these boom and bust cycles. I'm hoping this new leadership and a revamp of how things are done will result in better monetary policy moving forward. Okay, so where are rates? I'm going to repeat this because I think it's a message worth hearing again and understanding. There's no such thing as a rate. Sure, there's the national average, but again, that's an average. And as I mentioned, there are literally 35 different rates you could choose from, and that's just with a conventional loan. Rates will be different for each type of loan, like FHA or VA or bank statement or asset depletion or DSCR. They all have different rates. Not to mention that rates are determined by a handful of factors like your credit score, your down payment, your loan amount, the property type. And yes, your rate is important, but so is the true cost of borrowing this money. How much will it cost you to borrow that amount of money? A lot of people have that 30-year mentality in place, but honestly, how long before you either sell or refinance this mortgage? Having said that, I'm pricing 30-year fixed conventionals in the low to mid 6s and 30-year fixed FHAs in the mid to high 5s. My name is David Walterman. I'm a loan officer with Ease Mortgage. Hit the follow and drop a comment or a question below.